just wanted to, let's say, give you the, how could say it's a sort of investment brokerage perspective in addition to all what has been said. Several things. First, some years ago, some months ago, we were asked, dear Mr. Verdillon, what do you think, is there any premium for a green building? I was scratching the head and saying, premium, maybe better liquidity, but premium, we don't know yet. The answer today is that there is no premium. There is better liquidity, but there is no premium. However, there is a discount. There is a discount linked to your valuation if, from an environmental point of view, it's not a green building, HQA, BREEAM, or LEED. This is for sure. Now, in addition to this, the result is what? The result is that it creates other segmentation, other market segmentation. The market of non-good environmental building, where there is an added value potential market, and the others where you have specific funds who have launched funds for setting up, for launching green building, green funds. And I will not be complete in my analysis. I would not say that today in Europe and in Paris, where everybody knows that the market is short in terms of supply. So from time to time, you have investors, and I agree with them, and say, what do I do? Do I leave this opportunity, which looks like being interesting, but is not respecting the environmental parameters I must respect, and I do not invest my money? Or do I invest, not respect the environmental issue, but I know I will have to expend some money later? I can tell you the answer is that today, because you have some stressed buyers, they keep in mind the cost they will have to put in the building later, but they buy it, even if it is not a green building. Just some additional background on the field.
It's only on that point, I think we see it from a different way. Certainly it's a question of evaluation and reletting, but going forward, I think you take a picture, you get the label, or you do something about it, and then you go forward. And what we see is simply from the occupiers, everybody is socially responsible, would like to have a green building because it's good to have. But at the end of the day, to keep the building going, to comply with the future regulation, to do this and that, there's a cost price tag on it, and you have to discuss with your occupier if they would share at least partially that. And I think that is a big question we see always in the negotiations of the leases, how to share eventually the cost of keeping up with the label, keeping up with new regulation, and so forth. I think it's certainly very important if you sell the building and you can say, that is green, here you have all the information, there's a value in it. But I think if you look forward, it's not only taking a photo, you are in a dimension where it's moving forward. There you have really to get to share the costs which will be carried on with the building. And looking at the new regulation in France, it becomes a little bit more tricky, because with the loi Pinel saying that we cannot, or more difficultly, have a triple net lease, all these additional costs which may come up with regard to a green building in the future may probably not be given and transferred to the occupier, but you have to, as an investor, to keep it. So I think that's also important to keep in mind that that is not only one-dimensional looking into the future, you have really to have a budget for doing that, and who is feeding that budget is certainly the big question for me when I see how the occupiers are resistant to accept too much of these costs to bear.
My vision in some niche sectors that clearly, as Raphael said, there is some buildings that you can't rent anymore if they are not green or whatever. There is a clear discount and a faster obsolescence in what is non-green. This is also something that we see on the market, that we have much more faster obsolescence and a big discount, broad discount on non-green value, on non-green assets, sorry. And what we see also is a shift in the market where we have some tenants that are moving from existing buildings, which are not so old, 10, 15 years, to new buildings where with, for instance, where they put 600 people in an existing building of 20,000 square meters. They move to another one, which is 15,000 square meters with 800 people and a total different layout. So it means that for us, we lose renting 20%. So we don't rent anymore 20% of our square meters. So we have to think about, as I mentioned previously, about how to make money in services. So I see this as a more longer term in terms of trend, is that our real estate company will have to think about added value in services and not only renting square meters.